May profits be upon you. Welcome to another weekly Forex forecast. Happy 2026. May this year be your best year trading ever. Okay? All right. Now, let's take a look at the pound USD. The pound USD. Now, as far as next week goes, we have non-farm payroll on Friday. All right. In these kind of weeks, in the NFP week, Monday through Wednesday is the best time to trade. All right. You can trade Thursday, but you're probably going to see some consolidation because of the next day's big news NFP, the non-farm payroll. So you want to be careful of that. But Monday to Friday, you can trade every day this week. You just got to trade carefully come Thursday and Friday. All right, because of the news. Now, uh, as far as the pound goes, look at are we bullish or bearish? Look at this: lower low, lower high, lower low, lower high, lower low. This is our trading range. That's why I have the what do you call it? The Fibonacci retracement tool open over here. This impulsive move down, which broke this low, all right, breaking all this structure to the downside, means that we're bearish. All right, on the monthly time frame. We're on the monthly time frame, okay? So this move up is a correction to this down move. Impulse, correction, and we may be seeing the potential lower high, the next lower high for the next lower low. Got it? All right. So with that in mind, I need you to understand that you might be saying, well, we got a higher high, higher low, higher high, higher low, and stuff. Uh, this looks like an uptrend. It is an uptrend. It's an internal uptrend because we are in this range. All right. As long as until we break this high, we're not bullish, not on a macro level. This is still in the correction area, which is what? Above the 50% of this trading range. Sorry, I should have. I'm trying to hit that line here. All right, that's the 50% of this trading range. All right, you want to take your shorts when the market is in this area, premium prices. This area is discount prices. You want to take your longs from here. All right, after a break of market structure in any direction, in this case, it's bearish. All right, bearish break of market structure. We're looking for shorts. All right, we'll be looking for a big short. We want to catch the next impulsive leg. All right. The next impulsive leg is not, uh, it's not the correction. Yes, you could take longs from here, but understand you're going counter trend. The trend is lower low, lower high, lower low, lower high, lower low. It's going lower. Yes, in the short term, it is bullish, and you could trade that short term. But for swing traders, they're going to wait patiently for a short to take a short in a market that is trending down. All right. For day traders, you can take advantage of all these ups and downs if you like. All right. Just understand that counter trend trades are lower probability. But let me move on. Now, because uh, it's pulling back, all right, it's retracing, you got to find out look for that retracement to end. Where would it end? In the OTE levels. OTE, what is that? Optimal trade entry. That is this high, this low, and you put your Fibonacci on that, and you're going to get these levels over here. And the OTE levels, optimal trade entry, are right here between the 618 and 786. 618, 705, 786, around this area. This is your optimal trade entry area. And what happened? We came back to the 786, about an 80% retracement. And then we got this bearish engulfer. All right. For me, that was a very clear sign that the market is changing direction. There's a potential change in the direction. All right. And yeah, it was a bullish break of market structure, and you would think this is going to be the pullback. Yes, yes, you would. This is internal market or market structure. All right, an internal high, an internal high, higher low, an internal high high, an internal higher low, an internal higher high. You'll be bullish up here. All right, and the market turned bullish, still is bullish, and the but we're still within the retracement, and we're waiting to see when this retracement would end. This is what we look for if there's an ending structure for this retracement. So I stop looking for buys in this retracement when I see this. All right. And then you see how the market consolidated to the moving side by side. We go up, we go down, we go up, we go down. All right. So where did it bounce from? Here. All right. This monthly fair value gap. Pulled into it, pulled up, did not take a new high. That means it's a swing failure. It failed to make a new swing high. All right. And then you saw some more continuation, and you see a close below this close and high, this close and open here. So that is a bullish indication for me. All right. And it keeps me from taking buys. Now, what happens after that? Two candles up. Look at that. All right. 2 months of upward movement. And we took out a bullish fair value gap right there. You can see it. All right. The bearish fair value gap, and price ran right through it. What does that usually mean? All right. Well, you have to remember what the context is. We have consolidation here, and your bullish fair value gaps, your order blocks, all of those can get easily disrespected, just disregarded, because we're in a consolidation. And the best thing is to wait until the consolidation is broken. Now, you're waiting for a breakout. All right, you're waiting for a breakout to indicate direction. Is the market going to continue the trend up, the higher high, higher low, or is this the turning point and we're starting to head down? Is this the potential lower high for the next lower low? Got it? Hope I didn't confuse you. If I did, make sure you leave a comment and ask me to clarify. Okay. So we didn't break this high. Is this a protected high now? Well, we have a market. We have a close below these two, bullish candlesticks. All right. We haven't had a push back to the highs here. It ran into a fair value gap. We have a two touch going on over here. Look how the market came here, stopped here. It pushed up higher, could not get a close higher than the previous candle. It came back lower, back into the fair value gap, probing past it, but closing above it. Still a strong fair value gap. All right, it's still within the upper 25% of this fair value gap, and you see the market continued higher. It did disrespect that fair value gap, but we take that with a grain of salt, like I explained earlier. All right. So what are we expecting? It did not close past this high. We did not get a closure past this high. We're still getting respect at the 50% of this wick here. All right. It, it, all this means is that the momentum upward seems to be stalled out. All right. And we may be seeing the market get ready to turn around and deliver lower prices. So we're going to watch. We're going to watch this right here. We're going to watch the fact that it closed higher last month, January. Not January, December closed higher than November. Closed way higher, but it did not close above these two down close candles. Now, if we go down to the weekly, we're right back in the middle. All that really says is we are consolidating, and we're right back towards the middle of this consolidation, right back there. We're having trouble going higher. So This is the weekly. Each candle represents 1 week. All right. You can see how the market responded to the fair value gap here. All right. We have bull 5 weeks or so of bullish price action, but you can see the the momentum is starting to wane. All right. Yes, we had a sweep of the sell side, buy side liquidity over here. We had a nice sweep of that, but we have this big clear out wick up here. If we don't get past, as long as we trade below the 50% of that wick, I'm thinking that we're getting ready to hit another lower low. Uh, and what would make me think that? What would kind of verify that is if you see this uh, it's dotted, the gold dotted line there. That's what I'm looking for price to close. I'm looking for price to close past this. I need to say a close past that. That way I can see the market heading down. All right. This I need to see this close like so. All right. Uh so far, uh we're in the middle. I'm neutral. I'm not looking for buys in the middle of this consolidation area. All right. We did hit this bullish fair value gap, the monthly fair value gap, but we did not make a new high as yet. All right. And this bearish candle uh, closing last week is it gives me pause on looking for buys. It makes me pause on that. Okay. Now, I want you to see too this big old candle here that led to the high. This is where it was overcome. We see price close below it. This becomes an order block, right? And price goes back up into that order block, way up into it, but then it leads to lower prices. Do we have the next lower low here? Are we going to see this trend down? That's what I'm looking for. I'm keeping an eye out for that price action. Okay. Now, if we go down to the daily, what are we looking at? Come on with this, man. Come on with that, man. All right. From this high to that low, that is the latest high and low. All right. In this, this is internal structure now, but that is our external high. That is our external low. All right. And uh, uh, where are we? I got the fair value, with the fair value. I got the Fibonacci retracement tool over here from this high to this low. All right. And you can see that we are correcting this last bearish leg into this fair value gap. All right. And this is the area called the OTE between 786 and 618. All right. This is an OTE area, and this is where we are. This is where I put my attention and focus, because what I'm looking for to confirm bullish, I don't want to take. You see how this climb looks pretty impulsive. I don't want to take a long up here. I would wait for a pullback. If I'm going to take a long, I would wait for a pullback, which means there's an opportunity. There might be potential for a price to come lower. All right, not all the way down and start that lower low, but at least in that direction. There is unmitigated fair value gaps along the way, and sell side liquidity that the market could come and mitigate, and get. What I'm saying? Something to draw the market down. All right. See these two candles? I'm looking here on the higher time frame on the weekly. That is a weekly. If the market comes down and closes behind that, that will form a uh, weekly level order block, a bearish order block, and the price could come back and use it and mitigate it for lower prices. All right. I also want to mention on the daily, which is what we're on, the daily time frame. On the daily, this candle right there, we get a strong close, and the market starts to show comfort with trading below that low, this becomes a daily fair value gap. And I'll be looking for price to come down. What I want to see is the market get past this candle, get past the 50% of this candle and give me a closure. Once I see that, I'm waiting for a pullback for the market to come down for sure. Now, what would make me take longs? What would make me take longs? All right. Because the pound is a little stronger against the US dollar than the euro is, just a little bit, but enough to say, look at this, look how it pushed. And last week, while the euro closed bearishly, look how you know this isn't exactly bearish. This is more neutral of a close last week than the euro compared to the euro. If I can get to it, this is the no, I went past it. This is the euro USD. See how it closed? That's a pretty nice bearish candle. All right. Uh, Compared to the pound USD. All right. So it's more bullish. What would make me take longs? I would wait for it to pull back because it's too high for me to take longs at this point. I would wait for it to pull back into this fair value gap here. There's a fair value gap here, unmitigated, untouched, untested. All right, you're going to give me all kind of trouble, aren't you? All right, so I'm looking for bullish. All right, that's a bullish fair value gap on the daily time frame. We close past that low. I want to take low. I want to take shorts. All right, if we close past that low right here, I'll be waiting for price to pull back, and then I'll be looking for further downside. This looks like a swing failure to me. This looks like an attempt to go higher and break this high, and it didn't. So now we have lower, lower lows, and I'm looking for that to continue to see if that this at least in that direction. But I'd wait for a pullback for longs. It's looking better for shorts than it does longs. You understand? In the short term, until this is overcome, until we break that low, uh, it's not shorts all the way. In the short term, between this fair value gap and where the market is right here, right now, let me get it back on the daily. So I'm talking to day traders now. We break that. If we if we break this low here, all right, and we get a solid break here, I would start on the 15-minute and 5 minutes looking for shorts. All right, down to this low here, which is right above the weekly fair value gap here. There's a weekly fair value gap here, and I think that's where we're heading towards. Does that make sense? A pullback. If we market starts to show that it's finding support here, this would probably be a great place to take it long. That's all I'm saying. All right. If it goes past that, then it goes past that. We'll reassess at that time. But I think there's a good chance we're heading down. Could it continue higher? Yes, but I'm not interested in taking longs from up high. This is at the tail end of an impulsive kind of move, and that's not a good idea. It's at the end of that journey. It's probably going to pull back. If it does go higher, immediately, like upon the open Monday and Tuesday, maybe in the Wednesday it goes up in here, it's because it's being drawn into this daily fair value gap up here. And I look at that as uh, uh, a catalyst because I think because we're in the OTE area of it's in correction territory. This impulsive move up, even though this is the break of structure impulse high low, we're inside this range. I think this area is where we may find price turns over. Whether it goes all the way down, I don't know. But if it comes down, I think we'll be looking at taking something towards this fair value gap. I hope that makes sense to you. It sounded all cumbersome and convoluted, but you understand my point. Anyway, I will see you in the next video. Thank you for watching.